section which I have added on the tube, which I didn't send you. I'll send the new recent tube. Yesterday night I was adding these things. Yeah. So now what is this adjusting events actually? So I took one page to explain you entire adjusting events. Adjusting events are type of events which you should adjust in the books of accounts. Normally your financial reporting, your year-end balances. Now I show this in whiteboard, guys. This happened this way. So you have one line, financial statement happens. So this is the line. So I'm going to take 3 lines. Of course, I'll send these things in PDF. No worries. I'll send the recording also. So we have, for example, 31st 3rd 2021 is the year end balance. So this is the year the accounting is getting ended. So accounting year end. So you know the year starting is always 1st of April. Starting year is how much? When 1st April is how the starting in Sri Lanka 2020. Okay, so we have accounting year end. So we have done that. Then we have a time period where financial statements are announced in AGM. So this is a period where directors speak about their financial statement, and this is the period where the financial statement is approved and spoken on an AGM in front of the shareholders. But there's a period between accounting year end and financial statements being declared. So between this period, there might be certain adjustment. That adjustment which is related to this period, or when this happens within this period, that should be related to this previous period. That's what we say adjusting and non-adjusting event. Certain events which is happening with this period are not related to this previous year's account. Maybe that is relevant to the particular year or for the upcoming year. That we won't take. What is relevant to the previous year period? Now, if I take here as a line, this is the previous year. So if this is happening here, and that is relevant to the previous year period, then of course I need to consider it into my adjusting event. So I'm going to explain you how adjusting event actually is going to work. So let's see how adjusting event works. It says that an event after the reporting period that provides further evidence of conditions that existed at the end of the reporting period, including an event that indicates that the going concern assumption in relation to the whole or part of the enterprise is not appropriate. So they are saying that adjusting event can be adjusting event can be something which is happened between this period. You know, it is from this period to this period. It is happening, and that related thing is happening between this particular period. And when that thing is happening between this, announcing period, then of course you need to consider it as an adjusting event. How do we adjust that? Because still we didn't issue the financial statement. We can amend the financial statement if there's a mistake. So whatever mistakes are done in adjusting events, whatever mistakes are done in adjusting and non-adjusting events. Before we move on to this, I want to take a good example for this. Here is this IAS International Accounting Standards is one of the ACCA classes notes. Actually, I took it from a class note which I'm teaching for students. So I'm not taking IAS here. Here I'm speaking about LKAS, Sri Lankan standards. So then we move on to the point what I want to say. There are adjusting and non-adjusting events, right, guys? So information relating to a condition that existed at the reporting date. So if something has happened before, or because it is going to impact on the future, but the thing has happened before the year end, we should say it as adjusting. But what other things can become a problem for us? Settlement of outstanding court case. You have not paid the court case balances. If you don't pay the court, your whole business will become taken by the court. So at this point, you should state, you should try to pay the court's balances. You make the amendments what are necessary. Whatever the money you should keep give to the court, you should show it on the financial statement. So whatever the adjustment which is related to the court case, you should make adjustment. Bankruptcy of a customer. If the business believes that this customer is one of the major customer of the business, and this customer is moving out of the business without paying, means that will actually impact the business performance. Then of course you need to report about this customer, because this customer, maybe you might say show it under trade receivables as balance on the balance sheet. Trade receivables, you might show that there's a customer like this person is there. But if that customer is going to, he went bankrupted, you can't show the previous year's financial statement like everything is fine. Maybe on 31st 3rd 2021, the customer has informed that like you are finding out on 31st 3 2021 everything is perfect, but on April 10th you are seeing that the customer went bankrupt. Now you are issuing the financial statement on maybe June end. So when you are ending on June end, you have almost 2 months or 3 months period to adjust it, but you are not adjusting because you are thinking, no, we don't want to adjust it, because if you adjust it, the value of the income balance sheet will go down, so investors won't be happy. But you need to reveal, these are very important adjustments you need to do. You need to reveal that, then only the financial statement will give true and fair view. Then we move on to the next part, sale of inventory at below cost. So in RV adjustments, when you sell at the lower cost, and if you incur losses, the inventories, those losses also should be a part of adjusting event. Determination of purchase sale price of PPE. So if you sell some sort of non-current asset, if you purchase some sort of additions, you should have adjusted it as a part of IAS 10. I mean LKAS 10. Non-adjusting says that doesn't reflect condition that existed at the reporting date. So it doesn't happen before that particular 31st 3rd to 2021, but it fall in value of investment. It is going to be a major purchase of assets, announcing a discontinued operation, announcing a restructuring. So you have announced that there might be a restructuring. Announcing a dividend pay is also non-adjusting event, because they are declaring that they might pay you pay the money, but they haven't paid. So those things you don't want non-adjust. If you think that it's necessary to put a note, you can put, but it's not mandatory to put a note in your company's account. So major purchase of assets, like when you purchase new assets, that's a part of the upcoming year, so you don't want to take, and they have said that they will purchase this month, so again not certain. Fall in value of investment, the money value will go down, the market share is going down, so investment will fall down. That's also not a part of adjusting event. So these are the few things you need to know, remember, to be to remember that these are the part of adjusting event. So moving on to the point we want to discuss, it says adjusting and non-adjusting. What is non-adjusting? An event after the reporting period that is indicative of a condition that arose after the end of the reporting period. So that happened, but actually we don't want to adjust financial statement for adjusting events. Do not adjust for non-adjusting events after the balance sheet date that provide further evidence of condition that existed at the end of the reporting period, including events that indicate the going concern assumption in relation to the whole or part of the enterprise is not appropriate. So you need to understand one particular thing when it comes to adjusting event and non-adjusting event. Adjusting event, you should be able to make sort of adjustment on the books of accounts, but non-adjusting event, you don't do some sort of some sort of adjustment. But if you really want, you can disclose something in future. So I'm not going to move on to going concern and disclosure. Let's move on to the content, because I don't want to spend time only in explaining the adjustments. So then we move on. So then we have the financial statement of Amila PLC. Now you all know the standards properly, so I want you guys to find the answer. You guys itself find the answer. The financial statement of Amila PLC for the year ending 31st 3 2017 were authorized by the directors on 30th 6 2017. The following events took place in the company from 31st 3 2017 to 30th 6 2017. A. Decline in the market value of investment of company continuously from 1st 5 2017. Declaration of bankruptcy of a debtor by a court of law on 9/5/2017 who had purchased goods on credit on 1st 3rd 2017. So last year he has purchased, that is getting affected. Here the market value of investment is falling down. Destruction of inventory that had been in existence for 31st 3 2017 due to fire occurred on 30th 5 2017. So actually the goods were there, but there was a fire, and that fire is happening most probably on yeah. So it is happening on the May month. Okay, then we have receipt of a letter from the government on 20th 6 2017 informing that a land owned by the business as 31st 2017 will be acquired in order to construct a road. Which of the above events are considered as non-adjusting events in the financial statement of the company for the year ending 31st 3 2017 as per LKAS 10 events after reporting period? Now you all know that we all know that we've understood that what is non-adjusting and adjusting event. So they're not asking adjusting event. So they're asking only the non-adjusting event. So let's find the adjusting event. You know, number 1A, declining the market value of investment. I just thought now. I just said that. Give me a second, guys. So I just showed you here. When you are declaring the market value is falling down, it's a part of non-adjusting event. So A is non-adjusting event. So I can go with A first of all. Then I move on to the next part of the content. It says that declaration of the bankruptcy of a debtor by court law on 19/5/2017 who had purchased goods on credit on 1st 3rd. Now this guy who is declared who has declared, it becomes the declaration. It becomes, you can see the guy is becoming a bankrupted, so that it becomes an adjusting event. Then we move on to the next part of the content. It says that destruction of inventory that had been in existence from 31st 3 due to fire occurred in 30th 5 2017. Now there's a destruction of goods. Where do you record, guys? Do you record under adjusting or non-adjusting event? Easy to understand. A destruction is a non-adjusting event because the destruction is not happening on the last year, it is happening on the new year, and that is related to this particular year, not the last year. So we will consider that non-adjusting event. And there's a receipt letter from the government informing that the land will be taken on that the land of the business will be acquired to construct the road, but they didn't definitely say what was the date they will take, when they will take, and how it will affect the business. They didn't say particularly, and you can even speak with the government and ask to request an approval that you don't want to take the land, something like that. You can have a adjustment. So that is also non-adjusting. Even the reason the government has informed you a letter, but the government didn't inform when is the date particularly, when it is certain to take the thing from out of the business. So then from considering this, we can find out A, C, and D is the answers for non-adjusting event. So I'll move on with the answer number 3 for this. Okay, so then we move on to the next part of the sum.